Click the bell icon to get latest videos from Ekeeda.
Sometime in question we don't get profit and loss account. Instead, information is given in detail, item wise. We are required to arrange those items systematically and construct a vertical income statement and then calculate the ratios. Today we are going to do such type of one question. Let us read question now. The following figures relate to trading activities of Z Limited for the year ended 31st March 2014. Sales 10,57,000. In vertical income statement it will be recorded as sales. Closing stock. While calculation of cost of goods sold, this amount will be deducted. Purchases, this will be part of cost of goods sold. Loss on sale of asset, this is non-operating advertising selling expense. Rent, administration expense. Profit on sale of shares, non-operating profit. Provision for taxation, this will be deducted from net profit before tax. Salaries, administrative expenses. Salesman salaries, selling expenses. Depreciation, cost of goods sold considering factory depreciation. Sales returns, less from sales. Depreciation on delivery van, selling expense. Printing and stationery, administration expense. Audit fees, administration expense. Opening stock is part of cost of goods sold. Dividend received on shares, non-operating income. You are required to rearrange above income statement in vertical form and compute the following ratios: gross profit ratio, operating ratio, net operating profit ratio, selling and distribution expense to sales ratio, and net profit ratio. We have to first start with the figure of sales. Sales 10,57,000. We have sales returns 57,000. 10,57,000 minus 57,000, net sales will be from net sales we are required to deduct cost of goods sold, COGS. We have to start with opening stock 2,25,000. Purchases 8,35,000. Depreciation on factory assets 36,000. We can add now opening stock, purchases and depreciation. It is 10,96,000. Less closing stock. Closing stock 4,60,000. 10,96,000 minus 4,60,000. Cost of goods sold we have 6,36,000. We got 3,64,000 as gross profit or gross margin. From this we are required to deduct operating expenses. There first we have office and administration expenses. In administration expenses we are required to consider rent, salaries, printing and stationery, audit fees. We can add administration expenses. It is 84,000. Next we have selling and distribution expenses. Here we are required to consider salesman salaries, depreciation on delivery van, and advertising. Selling and distribution expenses total is 55,000. Now we can get total operating expenses by adding office and selling expenses. 84,000 plus 55,000. Total operating expenses 1,39,000. This will be deducted from gross margin. Gross margin is 3,64,000. So it comes to 2,25,000. Gross margin minus total operating expenses, we are getting 2,25,000. This will be called as operating net profit. To this we are going to add non-operating incomes. Profit on sale of shares is a non-operating income. Dividend received on shares, non-operating income. Loss on sale of asset 45,000 is a non-operating loss. Non-operating income we have added, we got 2,65,000. This non-operating loss will be deducted. Loss on sale of asset 45,000. Two lakh 65,000 minus non-operating loss 45,000. We got 2,20,000. This is net profit before tax. Provision for taxation we have 1 lakh. Less provision for tax 1 lakh. Finally we got net profit after tax 1,20,000. Let us calculate now various ratios. First we have gross profit ratio. Gross profit we have 3,64,000 and net sales 10 lakhs. So gross profit ratio we got 36.4%. Next we have operation ratio. Formula is cost of goods sold plus operating expenses divided by net sales multiplied by 100. Cost of goods sold we have 6,36,000. Total operating expenses we have 1,39,000. Divided by net sales we have 10 lakhs. Multiplied by 100. So we got it 77.5%. Next we have net operating profit ratio. Formula is net operating profit divided by net sales multiplied by 100. Operating net profit 2,25,000 divided by net sales 10 lakhs multiplied by 100. So net operating profit ratio we got 22.5%. Next we have selling and distribution expenses to sales ratio. Selling and distribution expenses divided by net sales multiplied by 100. Selling and distribution expenses total 55,000. 55,000 divided by 10 lakhs multiplied by 100. AC on कर. 5.5%. Next we have net profit ratio. Net profit ratio we can calculate as net profit before tax ratio and net profit after tax ratio. Net profit before tax divided by net sales multiplied by 100. Net profit before tax 2,20,000 divided by net sales 10 lakhs multiplied by 100. So it is 22%. Net profit after tax ratio, net profit after tax divided by net sales multiplied by 100. Net profit after tax 1,20,000. Net profit after tax ratio is 12%. We have calculated required ratios asked in the question. Also, we have arranged details given in vertical format. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.